Our top 10 tips for property investors. Hi, I'm Jaco Grobbelaar, the founder and managing director of Prosperity Enterprises. Buying your first property can be overwhelming. Before you sign your first property deal, your mind may be reeling with questions. Can I afford this property? Will I get financing? Is the property located in the right area? How do I make sure that this property makes sense from an investment perspective? And you know what? It is completely normal to feel like that. For this reason, we have prepared our top 10 tips to help you as a first-time property buyer or a property investor with things that you can keep in mind when you are acquiring property. Tip number 1, small action is better than no action. It's not about how much you do today. It's about how much you do every day. So instead of being paralyzed with all the things that you need to keep in mind in acquiring a property or building a property portfolio as an investor, make a decision to take a small step every single day. Maybe it is to view a property, or to submit that first offer to purchase, or to run the numbers on a number of properties to see whether a property is a good investment. The second tip is to have cash reserves in place. When you are building a property portfolio especially, you want to make sure that you've got sufficient cash reserves in place. So make sure that your access bond or flexi bond is activated and that you can deposit additional funds in your flexi bond or access bond so that there are reserves available for if interest rates increase, or if there's a tenant that is not paying, or if there's maintenance, unexpected maintenance that needs to be done. But make sure that you've got at least 10% of the value of your property in cash reserves to ensure that you are in a safe space. Remember that cash is king. Tip number 3, continue to build your credit score. Remember, as a property investor, you want to have a good credit score. Whether you are buying property in your own name or whether you are buying your property in an entity, you are then probably going to sign surety for that entity. So make sure that your credit score is top notch. That means that you need to pay your bills on time, that you ensure that debit orders don't bounce, that you have a low credit utilization rate, which means that you don't max out your accounts, and that you actively monitor your credit score to ensure that there's nothing inaccurate on your credit score that can affect your credit score negatively. Remember, if you have a good credit score in place, it means that the terms of a loan that you are given will be better, lower interest rate, a higher percentage of the loan financed, and overall better terms on the loan. Tip number 4, have the correct structures in place. When you buy property, you don't want to buy property in your own name. You want to buy it in an entity such as a property company, and then you want to make sure that a holdings trust holds the shares in your property company. The reason for this is when you don't build a property portfolio in your own name but in an entity, you make it possible to build a significantly bigger property portfolio because you are not acquiring these assets and this debt in your own name. Secondly, there are plenty of tax benefits in using the right entities. Not only are your inflows and outflows and your income and expenses recorded better for tax purposes, but you also have a lower tax rate, often in a company. And when you are selling the entire company, you've got the benefit of the conduit principle, where capital gains can be distributed to beneficiaries and taxes reduced significantly. And then, of course, you have asset protection. When you have a trust holding the shares in your company, your assets are protected because it's not your assets anymore. It's the assets or the shares of the trust, which means that if something had to happen to you financially, your property portfolio is better protected. And then lastly is for the estate planning benefits of the correct structuring. If you have your structuring in place and your holdings trust in place, it means that one day when you pass away, there will be no estate duties, executive fees, capital gains tax, and transfer fees. Tip number 5, buy at a discount. Make sure when you buy property, you are acquiring it at the right price. In property, you make your money when you buy, so make sure that you don't pay too much for a property. When you have acquired a property below market value, you immediately created equity in that property before you even place a tenant in that property. There are many reasons why people would sell a property below market value. It might be that there's death in the family, it might be that a couple is divorcing, it might be that somebody is in financial distress, or that the person is just not informed about what a property is worth. But there are many reasons why properties are being sold every single day below market value. Then we are moving to tip number 6. Make sure that you are using your own conveyancing attorney when you acquire a property. Remember, when you use your own attorneys, you can dictate the prices that you are going to pay and make sure that you get proper discounts from your attorneys. Secondly, your own attorneys will also give you much better service than the attorney of the seller. So when you are signing the offer to purchase, make sure that the offer to purchase states that you as the purchaser can select the attorney that will do the transfer of the property. Tip number 7, apply for 100% financing. Remember, when you invest in property, you want to use as little of your own cash as possible. So always apply for 100%, even if you have a deposit, even if you have funds available. Don't tell the bank that you have a deposit. Apply for 100% financing, and rather, after the bond has registered, activate your flexi bond or your access bond and park those funds in your flexi bond or access bond to pay less interest and to have a lower monthly installment. But having the access to that money, to withdraw that money or those funds at a later stage to acquire additional properties, is a huge advantage. We are then moving to tip number 8. Apply for financing at multiple institutions. Don't make the mistake to only apply for financing at your own bank. Often your own bank will not give you the best rate or the best terms for a loan. And the reason is simple. Some banks are more aggressively gaining market share, where other banks might be overexposed, and for that reason they are reducing the number of mortgage loans or the percentage of loans that they are giving. So when you apply for financing, you need to make sure that you are not only applying at your own bank, but that you apply at as many financing institutions as possible, like getting a quote for a new car that you want to buy. And then to look at those different quotes, those different grants that are given from the banks, and to choose the best grant for you. Tip number 9, this is a good one. When you register your bond for your property, register it at or above market value for more than the financing that you are getting. Because what that means is one day in the future, maybe in 6 months or a year or in a couple of years' time, when you want to apply for further financing or when you want to refinance that property, you don't have to apply for a second bond. You can simply go to the banks and say, I've got a registered bond of a higher amount. I would now like to borrow up to that higher amount. And that is also much more affordable than having to pay bond registration attorneys again to register another bond for you. And then the last tip for this video is refinance to market value as soon as possible. Everything in property is about cash flow. You want to make sure that you've got as much cash or capital available as possible, as this will put you in a safer position from a shortfalls perspective or for subsidizing shortfalls, and also it will put you in a position to be able to acquire more investment properties. So you can refinance your property, you can take those funds, you can put it in your access bond or your flexi bond so that you don't pay interest on that money while you are not using it. But then you can also use some of those funds when your reserves are sufficient to build a bigger property portfolio and to acquire more properties. That is our top 10 tips for building a property portfolio. If you would like to see more of this content, remember to like and subscribe. Thank you very much.